Hey, Slayer Gonzalez with your housing market update for the last 2 days of January. Cannot believe we are already through the first month of 2025. It has been an exciting month. I just finished my workout. That's why you see me kind of like this right now. I want to get this done and get it out before the weekend. So let's get into what's going on. Prices are up, inventory's up, and rates are pretty steady. Let's talk about the headline news for the week. Home prices continue to rise. We had a couple reports on that. Home sales, mixed bag right now, and the Fed stays put, which is really no surprise, and inflation stays steady. So a lot of sideways arrows. What does that mean for you? That means really the market didn't change so much as far as interest rates go. All right, let's take a look at the home prices. Case-Shiller Home Price Index. This is for the month of November, so it's always a couple months behind. But it shows that home prices rose month over month 0.4%, year over year plus 3.8%. And this is an all-time high for the 18th month in a row, people. Up 0.4% month over month, 3.8% year over year. That's really solid, and it just goes to show that people want to own a home. They're going to pay for a home no matter what, whether it's theirs or somebody else's. Why not pay for your own? All right, let's take a look at new home sales. New home sales, signed contracts on new homes up 3.6%. That is a huge number, 6.7% year over year. Median sales price also up 6.1% month over month. Yeah, that's a big number right there. And now when you look at the number of homes that were actually completed though, all right, it says 494,000, only 118,000 of them were completed. So really slow on the completion. Matter of fact, 108,000 aren't even started yet. But we are at 2019 numbers for new home sales. And why is that? Because there really still aren't enough existing homes to meet the demand. So everybody, and the rates are high, so everybody's moving to new home sales, where the new home builders, they are offering incentives, lower rates. And you know, if I was a buyer, I'd be looking at new home sales too. But you always got to look at quality. All right, quality over quantity. Okay, let's look at pending home sales. I told you we were a mixed bag. New home sales look good, but I tell you what, pending home sales 5.5% decrease month over month. That was the first decline in pending home sales since July. And well, why is that? Hey, interest rates have stayed high. Interest rates went up. Index is down. The 2024 average was 74.4. We were at 74.2 for December. So really not a good way to end the year on pending home sales. But you know what? That's in the past now. Sales are down 5% year over year. And that's existing home sales, which is different from the new home sales. Again, and I think a lot of this has to do with interest rates. Let's talk about PCE. This is one of the reasons why I'm getting this out to you late. And luckily, you can't smell me right now. I just finished my workout. 1/3 of the way through 75 hard. I'm feeling great. Lost 11 pounds. So that's good. But you know what hasn't been lost, or what hasn't come down? PCE, core PCE at 2.8%. Are we going to stall at the 3%, near 3% range? No, I don't think so. All right, remember, before COVID, we were well below, just below 2%. Core steady, and you know what? I'd rather be steady than up. And when will we see a Fed funds rate cut? They're looking at inflation. They're looking at employment. Some of the numbers that really affected everything were personal spending. Personal spending was up more than expected. The wage growth was steady. But let's look at this annualized core run rate. All right, if you look at the core rate for the last 3 months is 2.1%, really close to that 2% that the Fed wants. Last 6 months was 2.3%. Will we see those numbers improve? I bet you we're going to see those numbers improve, maybe even go down from 2.8 to 2.5, 2.6 this next reading at the end of February, which is reading the January number. So we'll see, no guarantees, but core numbers are going to get better. We just need to see really some catch up. The shelter costs have been lagging. They have been coming down if you look at every other report, but they're just not showing quite the same in the PCE report. But overall, a good report because it didn't go up. All right, so let's take a look at initial jobless claims. Another reason why kind of rates are, the Fed's looking at this. Initial claims were up 2 weeks ago. Last week, they were down 16,000, though, to 207,000. Continuing claims down 42,000 to 1.858. However, 2 weeks ago, those continuing claims were adjusted up to 1.9, again, which is one of the highest readings we've had in several years. So really, kind of a mixed bag, not a lot to talk about here, but you know what? People don't want to let people go, and once you lose a job, it's hard to get a job. So we'll see these numbers change. I do expect them to go up. And when they do, that's more ammunition for the Fed to say, you know what, it's time to cut the Fed funds rate. Let's look at VA rates. Not a lot of movement. It came down just a little bit, but we're right around that 6.5% line. Next week is jobs week, though. And really, I think next week we're going to see rates move. We might see them move closer down to that 6.25, maybe below the 6.25 range, which would be really, really good. As soon as we get those rates into the fives for VA, let me tell you what, it's game on, and that's right before PCS season, so we'll see what happens. All right, what does this all mean? Well, hey, mortgage rates were flat last week. They're down 7% year over year. Refinances were down 7% last week. They're up 5% year over year. And really, the market has gone kind of flat, I would say, and that's just because rates have been near 7% conventional, and then mid-6s for VA. Man, those are high rates. Not going to lie, we just need to get them down another 0.5 point, and then I think we're going to be in business, and people will start buying homes, and they're going to start getting off the sidelines. We are in a buyer's market in much of Oahu. Although Kailua, I have people who are in contract in Kailua. There's no credits there. Such a lack of inventory over there that they find a home, they're buying it. So, and you're going to see some more cash offers coming in too. So, especially in Kailua. Sellers, stay positive. Again, I've said this before. If you can hold off on putting your home on the market until the March time frame, that's what I would do. Just because you're going to see more buyers, and if rates come down, boom, homes are going to start moving off the market. All right, that's about all I have for you guys this week. I hope you have a great weekend. Stay dry, man. We got to make it through this storm. And I'm not just talking about rates. I'm talking about the weather. Have a great week, and we'll talk to you later. Aloha.